kicked off. Basically, we're here to give you access to car tax benefits. So over the next half hour, we're going to cram in a whole bunch of stuff. But the first things first that everyone's going to want to know is how do I actually qualify for these car tax benefits? So how do I get access to them? And then what does it mean for me? So how much can I actually save by accessing the car tax benefit via the Lendly Pay platform? How does it work? So we're going to be talking about tax side of things, but we're also going to be talking about a number of convenience benefits that you now have access to, thanks to Business Australia giving you access to this platform. And then lastly, we're car nuts. So we love everything about cars, and we love saving people money, not just on the tax side, but also on the car itself. And so we're going to talk through some of the strategies that you can do to further reduce what we call your total cost of car ownership, right? So let's get kicked off. Look, the first thing and best way to understand not only the qualification process, but also how much you can save is really looking at a Lendly Pay plan. So what's a Lendly Pay plan? It's something that each and every one of you have access to from today. So each one of you can contact Lendly and speak to a benefits consultant, and they will build one of these tailored to your situation. But what we're going to go through today is a generic example. So really what we call more of a conservative example to give everyone an idea and a feeling that, hey, this is not a benefit that is just for the few. This is a benefit for the many, right? And so let's go through that now, and I'll show you what one of these estimates looks like. So the first thing around qualifying for car tax benefits, let's talk about salaries, and let's talk about paying tax, right? So this is not a benefit for people just in, say, a top tax bracket, right? If you draw a salary and you pay income tax, you now have access to a tool that you can use to reduce that amount of tax that you pay. And so in this example that we're going to walk through, this is someone on 75,000, right? And so this person is in the same tax bracket as someone that earns 37 to 90,000, right? And so it's not the top tax bracket. And that's the first thing that we want people to understand. If you're drawing a salary and you pay tax on that group certificate that you see every year, then tick, your salary qualifies for tax reductions, right? And so Sally here earns $75,000 a year. Now the next qualification hurdle, a car. You either have to own a car or want to own a car to access car tax benefits. Might seem like a no-brainer. So look, I won't be offended. If you're on this webinar and you don't have a car and never want to own a car, then it's okay. It's okay if you don't want to stick around. So this platform is all about reducing your cost of car ownership. So the other thing that we talk about here is what cars are eligible. So I draw a salary and I have a car. What cars are eligible to access the car tax benefit? I'm happy to report any car. So it doesn't have to be brand new, right? And so that's why in this example, I show this as a used car because a lot of people think, to access car tax benefits, I got to go buy a brand new car. You do not. In fact, over 60% of the cars that come onto the Lendly Pay platform are either purchased used or are actually cars already owned by the employee. So you might be sitting there with a car that's under a car loan or that you own outright. And this platform can allow you to access tax benefits on those vehicles. And so this example is showing you a 2-year-old car with a purchase price of around $25,000. Now that's below our average purchase price. So most people buy cars around the mid-30s as an average. But again, we want to show you an example that is probably the more conservative side to help you realize that anyone can benefit from this platform. This is not just a high-income, expensive car platform, right? And so, in this example, you'll see the size of the tax benefits even for someone on a more conservative wage and a more conservative vehicle, right? So this person buys a $25,000 car and they buy the secondhand car from a dealership, right? And so this is the first savings that you can get via the platform. You can see here that the $24,900 is the driveway price of the car, but there's $2,200 worth of GST in the purchase of that vehicle. And so via the Lendly Pay platform, if you acquire a car with from a dealership that is GST, we actually pay the ex-GST value for the car. So that's actually your first tax savings that you get before we even get into the fact that you're going to be saving other taxes such as income tax. You save this GST portion here. So the next thing, so if we're talking eligibility, we go, okay, this person draws a salary and they're driving a car. Now we want to move into, okay, how much can we save via the platform? But to do that, we must understand how much we're actually going to spend on the car. So when you go through this process with a benefits consultant at Lindley, they're going to take you through your situation and how you use your car, because how someone uses their car will impact how much tax they can save. And so when you look at this as an example, Sally here does not drive a ridiculous number of kilometers, right? So she's driving 12,000 kilometers a year, right? And so this is another thing where it doesn't matter whether you drive the car 2,000 kilometers or 50,000 kilometers, right? You can access car tax benefits now that Business Australia has given you access to this platform, right? And so in this example, it's not an overly high usage amount of 12,000 kilometers a year. The other thing is how long you keep the car for, right? So we help you understand the right period of time to keep the car for you, and then what costs you're going to incur over that period of time. So these are costs that, so all we do is we sit down with you and we work out exactly what you would be spending on the car, regardless of how you actually buy the car. So we sit down and go, okay, based on manufacturer data, what are you going to spend over, in Sally's instance, 3 years to run this car doing 12,000 kilometers per year? So that's 36,000 kilometers that she's going to drive in 3 years. And we sit there and we go, okay, let's grab the manufacturer and Redbook data. So the fuel economy of the car is, average fuel economy is 6.1 liters per 100K. And it takes regular unleaded, and the 3-year moving average on regular unleaded is $1.55 a liter. So we know that Sally's going to spend $3,744 over the next 3 years to fill up this car, right? We know that the servicing interval of the car is 12 months or 10,000 kilometers. And so we know that we need to budget for the required services over that period. We know she's going to need a set of tires, and we know that the size of the tires from the manufacturer are 215, 45, 18. And Sally doesn't want to wash the car herself. She wants to access tax. She wants to pay for her car washes pre-tax. So she wants to allocate money into her budget for car washes, right? So we go into this level of detail because every bit of expense that you are going to have on your car. So think about what you spend on your car right now and what you're going to spend on your car in the coming years. We don't change what that cost is, right? We don't change what it's going to cost for you to run your car. What we want to do is we want to create budgets for it so that you can access the car tax benefit on those expenses. And so that's what we do here, right? And so once we understand what it costs to run the car, and we know we can't change that, now it's like, okay, what's the cheapest way to buy the actual car and own the actual car? And that's really what we're trying to achieve, right? And so the first benefit, before we get into the tax savings section, I just want to highlight one of the big benefits that employees get out of this, outside of thousands of dollars in savings, is the convenience side and the budgeting side. It's really that kind of free benefit of we can take all of your running costs that you're already incurring, where you would normally have to manage the ebbs and flows, right? And so it's like, 1 month you might have registration, comprehensive insurance, maybe even service and fuel. And you have a $3,000 month in expenses. And it's like, you got to find that money somewhere. With Lindley Pay, it lets you create a budgeting tool that goes, okay, I'm going to allocate money every pay cycle into these accounts to cover those costs when they come up. And it's just also an added benefit that I'm going to take that money out of my pre-tax salary to do it, right? So the first benefit I want to highlight is the convenience benefit. So Sally just contributes $456 a month into her running cost baskets, right? So she goes, yep, great. I know those costs are going to come up. I know I'm going to incur them. I'm going to allocate money to it. But now let's get into the cheapest way to buy the actual car, right? And so this is the third and last qualifier to access the employee car tax benefit, right? So the ATO says, hey, you got to draw a salary and you got to have a car. That car has to be on a novated lease. It's a horribly unsexy word. Like novated lease just sounds complicated, and I'm sure that's probably one of the ATO's plans, is to make it sound hard, and less people will access the benefit. It's a car loan, right? It's effectively we're getting finance for the car, and we have a monthly finance repayment. So it's called a lease repayment because it's a novated lease, right? But in this instance, it's a 3-year car loan, right? And so when you do a 3-year car loan on a $24,900 car, it's $534 a month, right? So we've got that loan payment. Now, in order to access the employee car tax benefit, it has to go on LendingPay's platform, right? So we need to be able to connect with payroll in order to get you that tax benefit, because this tax benefit can't be done in your tax return. It can only be done via Business Australia and via payroll. And that's why it's awesome that they're giving you access to this benefit, right? And so in this instance, right, so in this example, this is just an example, right? Your situation is likely to be actually a lot bigger than this tax benefit. This is more of a conservative one, right? And so by putting it on this novated lease via LendingPay and creating these budgets for our running costs that we're going to incur anyway, we're going to be able to access $235 in income tax savings, right? So that comes off our car costs, right? Because we would not be getting these tax benefits any other way. So Sally doesn't, this car's used 100% for personal use, right? She doesn't have to, justify any business use, and she's accessing $235 a month in tax savings. So that comes off of those lease costs, right? And so her net lease cost is $334 a month. So when we add that to the smoothed running costs, that $456 a month, that gives us what Sally would be paying every month towards the car, right? So by accessing the car tax benefit via LendingPay, she's only paying $791 a month for her car, including all of her running costs, okay? Now, that's a cash flow impact. That's the tax benefit. For me, it's like, okay, that's great. How does it work? So show me how, right? And that's the idea of this page. And I want to give you guys an insight, some variables to go, okay, that's great for this example, but my situation is different. And nothing will replace getting a tailored one-on-one consult with benefits consultant to build a plan just for you. But let me give you some insight. So how is Sally saving thousands of dollars in tax benefits? When we put the car on that novated lease, and the ATO lets us then go and basically pay for expenses pre-tax. So we sit there and we go, great, let's work out all those running costs up front. We go, what is that going to be? And in this situation, Sally gets to pay $7,500 of the car and its running costs using pre-tax salary. So we're not changing how much she earns. She still earns $75,000. We're changing how much of that $75,000 she gets to spend. And so she gets to spend $7,500 of it before tax is paid. And so we're reducing the amount of income tax she's paying, right? The other benefit she's getting on that $7,500 is because the expenses go through Business Australia and get taken out of payroll, they're actually claiming back GST for you. Think about GST on fuel, GST on servicing, GST on tires. And so when those costs pass through the company, they're claiming that back for you on your behalf. So not only is she saving the income tax on $7,500, she's saved the GST on that amount as well. So $750 over GST. And so when you do that, when you get to pay for such a massive portion of the car pre-tax, save that GST, she's saving $3,500 every year in tax benefits. Now, this is actually well below our average. And that's what I wanted to highlight. This is a conservative number because it's really there to make sure everyone realize anyone can access this benefit and anyone can save, right? Now, if you're driving a slightly more expensive car or you earn above $90,000, all of a sudden, even if you had the exact same car and same kilometers and all that stuff, your tax benefits would be bigger because your tax rate is higher. If you drive a more expensive car, your expenses would be more, so your salary sacrifice would be more. If the same person was doing double the kilometers, right, the tax benefit would be thousands of dollars more. And so that's how we get to our average tax benefit of $4,681. So a lot of people are saving a lot more, and then some people are saving a little bit less, like Sally here. So just bear that in mind. This example really is a more of the lower end to help everyone realize that this platform and this benefit is for all of you, right? This is not a big business, big salary, big expensive luxury vehicle benefit. It's for everyone. If you have a car and you are incurring car costs, you can now pay them pre-tax. So just an example, if Sally went, and this kind of gives you that side by side. So if she went and financed the car, like you might have your car on a car loan right now, and you have that monthly finance payment, and you have your running costs that you're paying every month. In its most simplest term, you can transition that into this platform and you're just changing, you might be spending $1,083 a month now, right? But all of a sudden, because you move it onto the platform, you get to pay a massive chunk of the car pre-tax. It's only going to cost you $791, and that's how it works, right? So let's roll the clock forward. Right, so what happens? You put the car on the platform for anywhere between 1 and 5 years, right? And so at the end of that period, we basically go, okay, you've got a few options. I want to keep the car. Okay, great. Well, the car has a retained value. It's worth something at the end. So what most people do is like, okay, I want to sell the car. And so we license the Redbook future value data, and we provide that back to you. And so in this instance, your Redbook, who's the all seeing, all knowing on future values of cars, they say, look, this car is going to be worth around $17,000 at the end. And so what do most people do? Great. Okay, I'm going to sell the car, and I'm going to pay out the amount owing at the end. So the ATO once again says, hey, it has to go on a novated lease to access the car tax benefit, and the novated lease has to have a balloon at the end. So a balloon on a lease is called a residual. It's just, again, it's just like novated. It's a really unsexy word. So it's the same thing as a balloon. It's an amount left owing at the end. And so in this example, the amount left owing is $11,700. Right? And so what do most people do? They go, great, I'm going to go and sell the car, and I'm going to pocket the difference between the resale value and the balloon. Here's the reason why the ATO says there has to be a balloon, right? It's this. Any money that you make when you sell the car at the end of the term, you do not pay tax back on, even though you were paying down the vehicle using pre-tax salary. And so that's why some people go, oh, I want to own the car at the end. And it's like, so now I'll do a car loan because there's no balloon. I own the car at the end. Yeah, but if someone's sitting there in front of you and they're giving you a car loan that has a balloon, but you set it and you save $15,000 in tax benefits, and here's a car loan with a balloon that you pay entirely post-tax. Use the tax benefits that you saved, the 15 grand, to pay out the balloon. You own the car at the end. So let me do a little. Let me do a little math. So if anyone wants to pull up a calculator, or if you're lazy like me, I'd let me do it as well. So let's figure out. Let's do a quick calculation to show you just how this method of car ownership compares to like anything else, redrawing from your home loan, paying cash, or a car loan, right? So we'll do a quick calculation that you'll be able to see, okay, what is the total cost if I own the car this way versus then I can compare it to all my other options, right? And I'll show you what I mean. So the first thing that we want to do, we want to go and grab the net lease cost, right? So this is what Sally was paying. It's what Sally was paying net towards the car every month, right? So $334.50, and we multiply that by 36. That was the number of months that she was paying that amount, right? And then we go and we go, okay, so that's how much she paid. She paid $12,000. Now, Sally wants to own the car outright at the end. Sure. If that's the goal that someone wants, then sure. Okay. We pay out that balloon. Sally now owns the car outright. So the number we just calculated is what it cost Sally over the 3 years. She didn't put any money in up front, and she owns the car outright. Now, remember what she paid for the car, right? So $23,747 is what it cost her. She paid $24,900 for the car. So by putting it on Lindley Pay, the tax benefits have not only covered the interest on the car loan, it's covered another $30. So how does that help me compare to all my other options? Think about it. If you redraw the mortgage, right, at 3% interest compounded daily, well, it's certainly going to cost you more than the purchase price of the car. It's going to cost you thousands of dollars more. And a car loan, thousands and thousands of dollars more, and even paying cash, right? So people go, oh, I've got cash. So I don't have a mortgage. I got cash. I'm just going to go and take that out of my savings account. I'm going to go put it in a depreciating asset. It's like, because I don't have to pay interest. I've just shown you a method where you can leave your cash in your bank account, earning you interest, and the total cost of ownership was less than the purchase price of the car. And that's why people do Lendly Pay, right? So yeah, I love doing that little calculation because that's how it really helps me understand why you do it and how the savings work. Right? So I appreciate that was a lot to cover. And so what did we cover off? We covered off who's eligible, which is anyone drawing a salary and who has or wants a car, right? And how do I access it? All I have to do is put that car on the novated lease, and I get to access tax benefits on those repayments and running costs. Okay, and so yeah, that's it, right? So how does the platform work? And some of this we're going to reiterate because I just really want to hammer it home that first of all, the car, like any car. So I've got a 10-year-old car, that's fine, right? Bring it on the platform for a couple of years, access tax benefits on it. I've got, it's only worth $10,000, fine, great. Like, it's not just about the car. Think about all the costs you're spending in running it. Those are the bigger expenses. Let's start paying those pre-tax, right? Or if you want to go buy a brand new car, right? We can even source it with fleet discounts for you. So we can get you a better price than you can, right? But secondhand cars, private sale, refinance, you've got it on a car loan right now, great, grab the payout, let's go put it on the platform. So all we do, we grab whatever car you want to bring to the platform, and when we build that Lendly Pay plan for you, we're building those budgets into an online account. So we call it the digital wallet, right? So although we do send you a sexy leather wallet with your Lendly Pay card, but the online account is a digital wallet, right? We open that for you, and then we give Business Australia access to that. So we say, hey, every pay cycle, drop that money from their pre-tax salary into their Lendly wallet, right? And then we give you the Lendly Pay card to use for your expenses, right? And so that Lendly Pay card is tied to your account and all your buckets in your Lendly Pay digital wallet to spend those budgets, right? And so we partner with Caltex Ample for that card, and we'll also stay tuned for the end of this presentation to talk about fuel rebates. So, and a special offer for you guys at the moment. So, but you use this card at any Caltex Ample, you go and you fill up with fuel, and you use our card. When you take your car in for servicing, you use our card. When you take your car in for tires, you use our card. You never dip into your pocket again, because you want to put any expense that you're incurring on your car, you want to put it through Lendly Pay so that you get to access tax benefits on it. So all of these expenses, including car wash, right? That's another one you saw in Sally's scenario. So roadside rego, comprehensive insurance, tires, whatever expenses you're going to incur on that car, you want to create the budget for it in Lendly Pay and allocate money for it, because that money is going to be pre-tax. Okay, so that's tax benefits, that's the platform. Now, like I said, we're car nuts. So let me kind of take you through a real quick snapshot around how you can further reduce your cost of car ownership. And this comes down to car choice, right? So we're agnostic. We don't, you can bring any car to the platform, any manufacturer, but where someone wants help and guidance, because we do this every day and all we do is cars and all we talk about is cars and looking at the numbers day in, day out, your benefits consultant, they love this, and they're going to be able to give you guidance and advice on choosing the right car for you if you want advice in that area, right? So this is an example of how much you could save in addition to thousands of dollars in tax benefits, but just by choosing one car over another. And so real quick, like this is an example we see at the moment, Holden pulling out of Australia, massive discounts, and people that we create budgets for ourselves. We go, okay, I'm going to spend $30,000 on a car. We come up with this budget, but it's like that budget is based on the very first transaction of car ownership. And it doesn't think about the thousands of transactions that happen after that. And so what we do is we look at all of those transactions. We forecast all of those thousands of transactions based on that vehicle. And we give you what we call total cost of ownership. And so examples of things that we look at, think about fuel efficiency, right? It's like, think about the type of fuel it takes. And so just because a car in this example is $3,000 cheaper, yeah, but the fuel uses is different, but the fuel efficiency in this one is different, right? The servicing interval, yeah, everyone's got fixed price servicing at the moment, yeah, but you got to service that car every 10,000 Ks and I get to service mine every 15,000 Ks. But then the biggest one of all is depreciation. Now, you guys don't have access to Redbook future value data. It's really expensive data. And so we buy it so that we can provide it to you to help you, guide you in your decision making on car ownership. So in this instance, right, yeah, this car was $3,000 cheaper, but it's worth $5,000 less. So it's like it's actually depreciated $2,000 more than the other car in proportion, right? And so all of those costs, both these cars, the person could save thousands in tax benefits, right? It's the cheapest way to own either of them is on Lend Pay, but they could save an extra $5,000 just by choosing one car over another. And so, feel free to lean on your benefits consultants for that kind of advice and guidance. So let's highlight some key things that some of these we've already learned today, but I really want to hammer them home and talk about how we can save even more. Right? So it doesn't have to be a new car. It doesn't have to be brand new. It doesn't have to be expensive, right? You don't have to use it for work. Now, some of you might be sitting there going, hey, I've got car loans, I use my car for work. And you might buy cars on chattel mortgages and traditional ways of getting tax benefits. Lend Pay, if you use your car for work, can get you even bigger tax benefits than claiming in your tax return. So if you do use your car for work, this platform is still for you. If you don't, this is the only way you can access the car tax benefit. So it makes it the cheapest way for you to own the car, right? And 82% of leases set up are set up on 100% personal use. So you're not allowed. Some people go, oh, it's too good to be true. It's like, I don't deserve to get tax benefits. You do. Your employer is giving you access to them, right? It is not too good to be true. It's just an awesome benefit. And it's something you can access right now. So you don't have to be in the market to buy a new car. It's like if you're going tomorrow and you go and fill up your car and you're sitting at the petrol station, you're about to swipe your credit card or your debit card and take money out of your post-tax bank account. Business Australia now gives you access to pre-tax salary to pay for that expense. So why wouldn't you use it? Any salary, like again, can't say it enough. It's like, this is not just a big salary benefit. It's like if you're going and you look at your group certificate and you're paying tax and you have a car and you're spending money on it, it's like use some of that tax to pay for those running costs. The other one, like a decade ago, it used to be tax benefits were varied based on, did someone drive enough kilometers? You may have heard that. Someone might have looked into Novated Lease years ago and said, hey, I don't drive enough kilometers to access tax savings. I call BS. It doesn't exist anymore. Any kilometers, right? Just think about your expenses, not your kilometers. And think about servicing and insurance and the registration. Those you could leave the car in the garage for a year and you still have to pay all those. Right? This is more of a savings maximizer. We call it a little tip. When you talk to your benefits consultant, and you can tell them that Kit said this, so I want to look at this. Like, don't be afraid of looking at shorter lease terms. A lot of people, they go, oh, I'll keep it for 5 years because they think it's going to stretch out and make it cheaper. And it's like, it's all about cash flow. Now that you have access to this awesome benefit, there are certain levers you can pull to actually increase your tax benefits further. And one of those is keeping an open mind to keeping the car for less time, not more time, right? Because the tax benefits can actually be bigger on shorter terms and give you a lower total cost of ownership. So that's just leaving you with that little tidbit there. So when you're talking to your benefits consultant, getting plans drawn up, in your mind, you might be thinking, oh, I want to see a 5-year. Don't be afraid to also ask for a shorter term to compare, right? And you'll be able to compare the total cost of ownership on it. And so just, this is one of the last slides, and, I appreciate you guys taking the time to learn about this new benefit you guys have access to. I hope you've learned a bunch and are excited to find out about what it will look like for your situation. As an added bonus, look, anyone that comes on to Lend Pay, usually we give you 10 cents a liter fuel rebate for the first 6 months. And then you actually have the opportunity to earn that 10 cents a liter rebate for the entire life of your car being on the platform, right? So you can just refer a friend or a colleague through. And when they start accessing tax benefits, you get the 10 cents a liter for the entire life of your lease. We're doubling that. So for Business Australia, just until the end of this year, so up till Christmas, if you come on to the platform and just get approved for the platform. So you don't have to have your car on platform yet. You just have to get approved by the 23rd of December, close of business 23rd. We'll actually give you 20 cents per liter fuel rebate. So an approval can last for 90 days. So you don't have to get the car on the platform until early next year. But we'll give you 20 cents per liter fuel rebate, right, for the first 6 months that the car's on platform. And then you can still earn the 10 cents per liter lifetime rewards for the rest of the time your car's on platform. So it's not just tax savings. That's our gift to you guys, and a special promotion to celebrate the launch of the benefit to Business Australia employees. Yeah, we're so excited to be able, like, our mission is to bring car tax benefits to every employee in Australia. And so this is just another step further in that mission. And so next steps from you, everyone. When I close this presentation, there will be a survey link, right? Now, I'm gonna live in ignorance and think that this was the best webinar you have ever seen. And I'll be able to sleep at night thinking that. But that link is actually gonna take you through to the starting process of building your own Lindley Pay plan, right? So go through the details. They'll let you select your car, put your salary in, your kilometers, your contact details. Go through that process, put in those details. A benefits consultant will be in touch to finalize a couple other points, just to make sure they've got the tax benefits right and we're maximizing them. And then they'll be able to present that plan to you so you can see what it looks like for you. There's no cost, there's no obligation to go through that process, right? But go through it so you can see how much you can save. Even if you think, oh, you know, I'll look at it next year. It's like, why wouldn't you go through it now to understand what this benefit can mean to you? Also, accessing the 20 cents a liter, trying to get that approved in place by the end of the year so you can access that, even if you want to do something in early next year. So, look, I'm going to say goodbye. Thank you so much for, again, giving me half an hour of your time.